Hello, everyone. Today, I have the honor of speaking to Jude Regev, aka Yoda. He is one of the head masterminds behind the Atom Foundation, who have an umbrella of projects with amazing use cases. One of the big problems the Atom Foundation wants to solve is the issue of liquidity for everyone. And today, specifically, we're going to be talking about Freez Finance. Now, the first project that came to my attention was Smart Swap, which is essentially a one-click slippage-free cross-chain swap. And 99% of these new upcoming projects often promise a lot of good things, but in reality, they're looking for a quick money grab. So I decided to do some research. And when I stumbled upon Jude and listened to him speak in a video, something stood out to me was his passion, ability to think outside of the box, and his intelligence. Now, the goal of this conversation is to fully understand Freeze Finance, and I want to make things as simple as possible. And full disclosure, guys, I've done my research and I know many of the answers to the questions I'm giving, but my goal is to help everyone understand. So let's begin. First off, Jude, how are you doing? Please introduce yourself and give the community a little insight of what the Atom Foundation is trying to do.
Yeah, sure. Thanks very much for having us. Like you said, our organization called Atom Foundation, and we focus in on one thing and one thing only, which is basically solving liquidity issues on the blockchain. We don't do anything else besides solving liquidity issues. The reason that it's so important to me is because I see the blockchain like the internet, and internet without the speed is pretty much like the blockchain without liquidity, right? You cannot really build stuff if whoever participates in that will not see a way out, like exit strategy. You cannot scale stuff. You cannot change the world without have mass adoption. So liquidity is kind of the foundation of everything. And if you have a liquidity and you can have a cross liquidity between multiply different projects, it's even expedite everything. So sometimes there is project that doing home run, and sometimes there is project that suffering from a lack of knowledge. People don't understand how it works, or they just come to the market too early or too late, or nobody wanted. Everything can be possible. There is a lot of industries that nobody care about. For example, real estate. Not every person like or understand real estate, but real estate is a major $14 trillion market and it's needed, right? And there is other stuff, right, that people like, but they don't have major liquidity in it, right? But if you have a lot of solution for liquidity and somehow eventually they're working together, like utilize each other or empowering each other, you're kind of building better ecosystem, right? And that's basically what this Atom Foundation goal about. We don't bring to the market a lot of projects. We have some projects that we built in 2016, 17, and we just right now brought them to the market. For example, SmartSwap. When we built it back then, there was no DeFi. There was no understanding how slippage worked. People didn't even know what slippage is. We couldn't brought that back then because it's solving a problem that not yet been created, and it was too earlier. And now that the market is more sufficient and people understand more about how stuff moving, now it's better time to bring it and take the industry to the 2.0, to the next level. Same thing we have with stuff that will need to wait. Unfortunately, I am aware of project that we build that most likely will be available to the market in year 4 or 5 from now, because they're extremely earlier right now.
Wow.
But no rush. We don't need to rush and bring to the market everything. We just need to bring it on the right moment. And when it's come to Freez, I think Freez right now is one of the things that it's a good timing for Freez, and I will explain more about what is Freez in a moment. But we have Freez for a very long time as well. And we're thinking that right now is the right time to bring it along, especially because regulation pushing everybody and stablecoin kind of getting into the corner and deadlock with all the regulation around it, and people kind of scared about big money being handling in centralized way. So let's jump into it and understand what is Freez all about. And that will make sense to you afterward why it's good timing right now. So the first answer, so what is Freez, is basically by saying that Freez is stablecoin alternative, but it's also alternative to the crypto mining, right? Sorry, crypto lending. And before I will explain how it's alternative, I want to explain what's the problem with crypto lending and with stablecoins, so people will understand that. The problem is that first, there is no such kind of a thing, stablecoin. I know that people use the word stable, and it's kind of abusing the word by call it stable. But think about it. If you have a stable coin and the market is booming, right? And you want to jump on the trend and go after this booming trend, you don't mind to sell your stable coin, which worth, let's say, $1 for 99 cents or 98 or 97, because you want to jump on the trend. And when the market is crashing, you don't want to buy into a stable coin to avoid volatility and pay even $1 or $2 or $3. So by doing it like that, you're basically creating a scenario that the stablecoin can gain or lose a few percentage to here, a few percentage for there. Now, as a trader, you may say, okay, I avoid from losing 10% or 5%, or again, 10% or 5%. So I don't mind to pay fractional more cents on top of the dollar. But do you understand that if stablecoin is moving few percent up, few percent down, that means there is no mass adoption for that as money, right? It cannot become to be money. Money cannot, government cannot utilize stablecoin and wake up in the morning with 1% less money, right? Government can go bankrupt, inflation, deflation can kick in, import, deport, businesses can be distressed. It's very, very a danger, right, tool. So another problem with stablecoin is that if I want to park my money and move from my cryptocurrency to position that I'm not trading, aka parking on stablecoin, I basically in many jurisdictions trigger tax event, because that's considered a sell. So if I have $1 million that I bought early days in $1,000, $10,000, and now it's worth $1 million, and I think that the market is going down and I want to avoid that bear market, by parking it on stablecoin, I basically now need to pay taxes. Uncle Sam and other jurisdictions don't care that I didn't convert it to fiat money. It's still considered a sell. So that's another issue. Now, if I want to place short order on future, a lot of people today using future in order to place short order to avoid losses when the market is going down. First, it's not free. I need to pay for that. I need to park some of my money on future, so I cannot put all my money on cryptocurrency. And second, if the market shifts to the other way around, I can be risk on liquidation, right? So it's not passive thing. I need to be active, and I need to put limit order, and I need to pay fees as I using it. So it's also dangerous tools. If I will choose to go and borrow money against my cryptocurrency, right, in order to avoid tax event, again, it's not free. When I borrow money from Celsius or other players, I need to pay something for that, and it's not cheap. That being said, I don't get 100% LTV. I get 50, 60, 70, sometimes even 80, but not 100. And even if I get 80, there is a risk there, because if the market's shifting and going down, they can liquidate my entire assets just because it went too much down. So I can go to sleep thinking that the market is strong, and then wake up in the morning and realize that my entire $1 million, $100,000, whatever it is gone, because the market just bumped for a second below that 20%, right? Extremely risky solution exists today in the market. They're not perfect, but they are what they are. And Freez Finance is basically designed to remove the need to use them. It actually comes as an alternative for all those solutions. In other words, what I'm trying to say is that we do not need stablecoin. We can take any type of cryptocurrency, even if it's brand new. By the way, as you know, you cannot borrow money against new tokens. They need to be top tier, right? But here we can take any type of cryptocurrency, and we can basically freeze that cryptocurrency. And I will show you how it works. So once you log in to the Freez, right now, by the way, the Freez it's under testnet. So I'm logging with testnet network, right? And you can go, by the way, to Freez Finance, and you can do that as well, and testing the system. So once I log in, I can take any type of cryptocurrency. Let's say I take in ETH, right? I can take one ETH, which is value right now is 3,035.42 cents, right? And by one click, I can basically freeze my ETH. So what that means is that, let me see. Oh, I need to have more on change. That's it. All right. So by one click, I basically can freeze my ETH. And it doesn't matter if it's an ETH, if it's a BNB, if it's USDT, if it's a Bitcoin, any type of cryptocurrency, I can basically freeze the value. And what I say by freezing the value, meaning that if I had a token that's worth $3,000 and I froze that value, I can go to sleep, wake up in the morning, or day after, or week after, or 1 year after, or even 10 years after. And by one click, I can basically unfreeze the value of the token, right, back and get exactly 3,035.42. So if I'm freezing it or unfreeze it, right, I don't mind that the value increase or decrease in the market. Because if the market increase, I will get less ETH, but it's still going to be worth 3,035.42. If the market decrease, I will get more ETH, but it's still going to be worth exactly the same face value that I basically froze. So it's kind of, I'm borrowing money, but not 80, 50, 60% LTV. I'm borrowing 100% LTV. There is no time when I need to get the note back and get my money back. I can come anytime I want from now or 10 years from now, or anytime even more. There is no payment that I pay when I'm freezing something, right? There is no pay when I pay, there's no payment to keep holding the freeze, like you borrowing money, there's no payment for holding it, right? So it's actually free from any payment. There is a small payment when I unfreeze that. So when I unfreeze that, I pay 0.3% to unfreeze it back. And that money basically go back to the system like we do with all other projects, and it's been used to buy the freeze back from the market, increase the value of the token. Now, only those that unfreeze pay the fees. But as you know, a lot of people that used to hold dollar money, they didn't go to Switzerland to cash out and get gold. A lot of people that have USDT did not go back to the original issuer, to the company, and say, give me fiat money. A lot of time people take that note, either the paper money as a dollar or the USDT as a token, and they sell it forward, right? And that's how it keeps moving. So the same thing here. If I'm freezing, unfreezing, basically, I can avoid from volatility. There is no tax event. It's not trigger any tax event because it's a borrowing 100%. There is no liquidation, right? There is no risk from any type of liquidation whatsoever. And the best part is that it's not working like banks, that they are fractional reserve, or like USDT companies, stablecoin that they one-to-one. Because with all those stablecoin, they need to show you that every quarter or every month they come with CPA report and say, hey, let me prove you that I'm one-to-one, same face value. But I don't trust these companies that they will stay one-to-one. I don't trust that when they keep investing our money and making money from our money, that when Black Swan event will happen, another 9/11, another subprime, what will happen to their money? Is it at risk? If it's at risk, it's not one-to-one anymore, right? I don't trust that if they will, rug pulling the money and disappear because it's centralized, right? Think about banks. When you put your money in the bank, immediately bank leverage your money, like money multiply, right? Some banks doing 10x, some banks doing even more than 10x. A lot of banks working every day with a sign above the head, we're about to go bankrupt, it's just a matter of time when, right? So all those methods of one-to-one centralized way or multiply, money multiply like the bank, the old-fashioned method and extremely risky. And the way that Freez is working, it's completely different. Instead of have fractional reserve or one-to-one, we have actually overload reserve. So what that means by that is that when you're selling the ETH, you're not selling the ETH, actually, when you're freezing the ETH and borrowing against that frozen ETH, we don't keep holding that ETH and have exposure. What's happening, the Freez Finance take that ETH and immediately sell it at the market. You utilize the smart swap to sell it at the average market, not below, no above, but at the average market. So what that means for you? That means that instead of go to centralized exchange or DeFi and sell to the order book or lose to the slippage, you immediately get the same face value of the market, right? Whatever the average is, and we immediately sell it at the market. We may gain some, we may lose some, But the main idea here, imagine yourself that $1 billion being frozen by BNB, ETH, USDT, Bitcoin, any type of cryptocurrency, and it being converted from cryptocurrencies to stablecoin or USDC a little on once government will kick in. So what happened, that money stay in the smart contract, but it's not stay still. It go to work. It go to Combine, it go to Freez Finance, it go to Vince, it go to decentralized protocol that allow you to stake in very safe way in order to generate APY. So what's happening over the time, the reserve instead of being one-to-one is growing because it's generating 8 to 12% APY over here. It's not like my money and your money is right now on USDT bank account. And when they're generating fees or interest rate, I don't see any reward. You don't see any reward. They don't sharing that profit with me and you. Now, even if they want to share, they actually cannot, because that can turn them to be a security because they are a centralized entity. So they cannot even share even if they wish to. But here, the reserve take the money and increasing the reserve more and more and more. And eventually, in some point, you will have above 100%. You will have 110, 105, 120, 150. So once it will cross 120, it will basically start to distribute those profits to people like airdrop. So if I'm holding a Freez ETH or Freez BNB or any type of Freez token, not only that I borrow 100% LTV, not only that I don't pay for that borrowing, not only that I don't have liquidation fees, but this system actually pay me for borrowing money, right? It's crazy. I mean, I never saw a bank that lend you money and actually pay you for that, right? So here I basically making money just from avoid volatility in the market and without trigger any taxes. Now, if I'm Tesla and I want to receive payment with Bitcoin, Ethereum, or Doge or Dogecoin, right? So I don't want to get $100,000 with Bitcoin and immediately rush to sell it before I'm losing $1,000, $2,000 over that money because the market fluctuated. Here, I can say to people, send me frozen BTC, so send me frozen ETH, frozen BNB, frozen USDT, frozen Doge. So by sending frozen token, you can basically turn every cryptocurrency also to a way of payment because the vendor do not need to worry about volatility anymore, but you know for sure that you have the money back with more than one-to-one. Now, that being said, if you're thinking about the entire system, you're basically looking at that not just on cryptocurrency. I mean, everybody, if everybody will look forward, you can see that in the next 5 years, we will see more and more solution for stocks that will be either synthetic stocks or maybe digital stocks that will be tokenized. Eventually, the ecosystem, the financial ecosystem, stock, businesses, real estate, everything eventually will be digital. Can you imagine yourself that you're holding Tesla or Apple or Google stock, but you don't want to sell it because the market crash or volatile, you just freeze it without pay taxes. So it's freeze and freeze. Let me give you another scenario. Imagine yourself that you go to Binance and you have 30 different tokens that you invest in. And when you think that the market is fluctuating, instead of go one by one and place order, which is take forever, because until you will finish number 10, number 30 already down, right? It's take a lot of time to place order for 30. Imagine yourself that you have panic button, freeze all, unfreeze. Imagine yourself that you wake up in the morning and you unfreeze, go to sleep, you freeze. You don't need to put limit order. So you can freeze, unfreeze, and avoid volatility, but also don't pay taxes or trigger taxes as you trade, right? It's a new world that can change the game. Why the heck do I need a stablecoin? Why I need to sell my asset to stablecoin to park temporary if I can freeze my value of my token and unfreeze it at any time later on? So it's kind of removing the need to have any type of stablecoin. If that makes sense?
Yes. And can I ask one question with an example and you tell me how this works? So let's just say I have Bitcoin and it's the top of the bull market. It's worth $100,000. Okay. I have a feeling that we're going to go into a bear market and the sentiment will change. So I decide to freeze it. Now I'm freezing it, so it's not a taxable event. And I'm getting a crypto loan and I'm getting 100% of the value that I can use. Now, let's just say we go into a crazy bear market and Bitcoin drops to $10,000. In a way, I just 10x'd my investment if I were to buy back. Now, my question is, if I unfreeze, where does that extra 9 Bitcoin that I'm supposed to get come from? Is it from the reserved and APY generating that you're talking about?
So that's exactly the point of what our system exactly all about. When you give me BTC or ETH or BNB or USDT, and let's say the value is $50,000 for BTC, and you freeze it, and the market go down and become to be $10,000, like you said, and then you unfreeze, you will get $10,000. Sorry, you will get $50,000 of BTC when you unfreeze, which means you will get 5 Bitcoin instead of 1. Now, you asked where that coming from, and that's what it's all about. We didn't hold your BTC, and when the market go down, we end up with BTC that was instead of 50-10, or BNB or ETH that was less. We actually sold it at the time that you froze the token. We sold it on the market, but instead of selling it like everybody, I mean, what's happened when market going down? You want to sell your BTC for 50. I want to beat you. I sell in 49.99. Josh Mo start to see both of us and say, I will beat them both. And he's selling 499.98. So now it's become to be a race to the bottom. That's why you see the price going down very quickly. So instead of rushing or participate in that bleeding, right, you immediately freeze your value, and we utilize the smart swap to sell at the average market price. Now, what happened is we may lose or we may gain. It's like, I don't know, did you ever bought Forex money with bank? When you buying from bank Forex money, they show you the price and they freeze it for 60 seconds. Obviously, the price is not stopping. The market is still fluctuating, but they freezing the price for you. Now, they know that they may lose some or they may gain some, right? But they know that the fees that they're charging will cover that. Same thing here. When you give me ETH or BTC or BNB or any type of cryptocurrency and immediately the system selling it at the market, we know that we may lose some, we may gain some, but eventually when we take 100% of the money in the smart contract and we put it to work and generate 6 to 12% average APY return, that average APY return can cover any small gain or lose that we may have. So that's why I say over the time, you will have by far more than 100% reserve. It will be overloaded reserve and not fractional reserve or one-to-one reserve that you need to prove that it's one-to-one. It will be overloaded reserve. And it's more safe. Can you imagine to yourself that you borrow money from a system that the entire obligation is $1 billion, but the entire money in the reserve is $2 billion, right? It's by far more. So it's by far better. And like I said, you don't need to worry about that the value go down, because when the system's selling your token and holding a stable coin or USDT instead, at the time that you unfreeze, it will go and buy back from the market whatever the average market is. Obviously, in order to speed up stuff, the system will keep a little bit. There is a machine learning that doing some calculation how much to keep USDT or BTC or BNB and not convert it to BNB to stablecoin. So if you want to place an order, we don't want you to wait 1 or 2 minutes until we will buy back. You will get immediately BNB and ETH, and then we will sell BTC and buy BNB and fill back the side reserve that doing it, right? So that kind of a system can change the game, because I definitely see exchanges that utilize, I mean, if I was an exchange, I mean, if I can think about it, if you have a panic button that people can freeze, unfreeze, more people will use it. More people will use it, which means the exchange will make more money from fees, because people easily will do freeze and freeze. Because if you ever trade on those exchanges, you know that the payment that you pay for the exchange is not big amount. It's 0.1%, 0.2, whatever. The big amount that you will lose, that when stuff is booming or dropping, you need to beat other people, and then you lose to the order book or you lose to the slippage. That's where you really losing, right? So here it's basically alternative. And like I said, it's not just alternative to cryptocurrency, it's alternative also for potential stock that will come to the market later on. So the market is huge. If you're thinking about stablecoin, it's one of the biggest market in our crypto industry, right? We're talking about more than $100 billion daily trading. So it's very huge, right? Depending on the season, it's very huge. And if you're talking about also about crypto lending, right? Crypto lending, we're talking about tens of billions of dollars of people parking money in order to borrow against them. By the way, let me show you another thing that people can utilize. I will show you here. One of the things that Freez will have to allow to project to enjoy from. Show you that. So we will have something that's called bear market farming. What that means is that imagine to yourself, I'm a project and you holding my token, right? Let's say I'm a project, you're holding my token, and then bear market come along. What you will do as a holder? You're probably going to sell and you will wait for the market to go down, and then you will scoop back or not. Maybe somebody will take your attention and you will move to the next project, but that will be your attention, right? Now, first, I don't want to lose you as a user. Second, when you will sell, you don't mind to lose a little bit and you will sell a little bit below the market just to quickly sell, right? So there will be like a bleeding, rest to the bottom, like I mentioned. And what we, let me the page to go up because I'm showing you, not the page, I'm showing you here a design. So I'm trying to open that, how it's going to look like. But what I'm trying to say is that project will be able to offer to their users, instead of going sell the token, freeze the token, and at the time that they're freezing, they will get airdrop, like staking, like APY. So I don't need to worry that the value go down because it's freeze, but as it freeze, I still getting APY during that time. So when I unfreeze that, not only I got the same face value when I being frozen, but I also get all the APY during that time. That can, I think, or that's the goal here. I think it cannot reduce the bear market. There's no such kind of thing, but it can reduce the bleeding, right? Because if you will freeze it and the smart swap will sell it at the market at average price, there will be less race, right? There will be less race to the bottom who's selling it at cheaper price. And that can help to reduce the bleeding, right? At least that's the main idea here. It doesn't make sense to use the bear market farming when the market is booming because you don't want your token to be free. You want to be free from freezing so it will scale. But when market go down, you definitely want to stay freeze to avoid tax and avoid losing money.
Beautiful. Let me see. Yeah. So in terms of, do you want to speak about a little bit about marketing / licensing? And I remember you spoke about an example of a Walmart, how you don't want to build one, you just want to plug your product in.
Yeah. So people that know me know that I hate marketing. I hate sales. I actually hate them both. I'm not saying they are not important. I just don't like them. That being said, I think that if you're building something good, you should not challenge yourself to start building other stuff that are out of your focus. And what I mean by that is that, for example, if you're manufacturing and you're building good brand of TVs, I don't think you should challenge yourself to build a Walmart or build, Amazon or Alibaba. I think you should go and partner with them because they already have the traffic. So you should focus on building and they will focus on marketing and sales. And same thing in our technology. A lot of companies cannot build more than one project, unlike the real world that a lot of companies have a lot of projects, right? A lot of product. In the technology area, you don't see companies building more than one project because most of the time they need to spend on marketing and sales and all that stuff and acquiring customer and customer relationship, right? So we cut off all that part so we can keep building solution. And the way that we gaining back that marketing and sales by far better is by building free license. So unlike other project in the market that offering code and you can copy the code and fork the code. In our case, we do not allow to fork the code, but we have one button that allow you easily to, by one click, to clone the entire product. You can call it whatever you want. You can change the name, the logo, the background, very easy. By 1 minute, you can have your own look and feel design. You can change the URL, and you can even charge on top of that whatever you like, as long that you reimburse the user for the fees, right? If you're charging whatever you charge. For example, every time we have a product and we're charging gas and fees, we don't charge the gas, the network charges the gas, but we charge fees, we reimburse for the gas and the fees. So when you're charging on top of us, we will have the smart contract for you ready. So all you need to do is just reimburse the user for the fees that you're charging. And the main idea behind this concept is that if you have 10,000 users, Joe Schmo have 10,000 users, some exchange have a few million users, some wallet have another few million users. Eventually, as a long tail, as a network, you will have by far more users than any other project out there that try to get them by themselves. So I think by taking small slice from the pie and give the majority of the profit for our partners, right, will eventually bring us better, will bring us by far more scaling and by far more profit, because when you're big enough, right, you don't need to be greedy. You can have small slice of the profit to your community and to your company, but eventually it will be growing. It's like, think about McDonald's, right? So they are not here in order to sell burger. Most of the profit from the burger go to the licensee, right? But they are here to collect real estate. Every person that have basically a license is kind of another real estate that McDonald's. Actually, McDonald's is not about burger; they're about real estate. That's their business. But that's how they did it. They did it cheap for everybody, accessible and affordable for everybody, and then they become to be mass, right? And that's the goal. The goal is to build something that our community will have a lot of return. We don't want to build stuff that will do 10 or 100x return. We really want to do stuff that will change the game. So the only way that I'm familiar with do that is collaboration, partnership. You cannot do home run if you're alone. It's not possible.
Beautiful. And do you want to touch upon kind of like the tokenomics of Freez? What is a dumper shield? What is a public reverse presale, a reverse KYC, all of those things? Try to make it simple as possible for the community, if possible.
Sure. Let me share my screen. Different screen. Let me see. All right. Tell me if you can see it.
Yes, I can see it.
Okay, good. So we have two products. Usually we bring two products at a time. So I guess in our next session, we'll cover the PDO. But basically people that will invest in the PDO or Freez, they will get one soft, right? And they will need to put amount, how much they want to invest in each project. So this is the tokenomic that explaining both of them because they have the same terms, okay? As you can see here, there is few columns and I will go through them. There is a pre-sale, there is public sale, there is a PDO1, PDO2, and then here there is more explanation about treasury router, and I will explain more about it. So the first thing to understand about the public sale and the pre-sale is that it has exactly the same terms, right? There is no difference between public sale and sales and private sale from terms point of view. I don't like to do any kind of discrimination between people with a lot of money versus those that have less.
And there's no team
but that being
tokens.
said, the only difference is the check amount. I will talk about that in a second. So the only difference between public sale and pre-sale is that public sale is limited to $1,000 check, well, the pre-sale is limited to soft agreement, which is up to 250,000. Usually the pre-sale is communities, it's influencer, it's exchanges, or those that have a connection to people that can help the project massively. In other words, added value, right? Like I said, project cannot be successful if it standalone. You need partnership. And what's better than partnership than those that have skin in the game, right? So they have something to lose and gain. So that's the best partners. And the way that we're going to do that is that we're going to run the pre-sale. Usually when we run a pre-sale, it can be around $5 to $10 million pre-sale, right? So that's kind of the range. I don't know exactly what's the end up will be, because we'll cap it by time frame. We don't want to keep it forever. So we'll sell as much as we sell. And then we'll start immediately after it's selling, we'll start the public sale, right? What you can see here that when we're starting the pre-sale and the public sale, they will have 90 days, right, of staking period. And during that 90 days, they will get 430% APY. In other words, that means it's like to get double, right? It's kind of double your money. But since the value of the token, the pre-sale price will be 0.005, which is, by the way, half price than what Smart and Diggen starts, right? And the listing price will be 0.02. In other words, it's kind of saying that even before everything is scaled, whoever invests in the ground floor of public sale and pre-sale, starting with 8x, right? 8x, right on the door, right? So obviously, if you will do 10x or 100x, you can multiply that accordingly. But the starting point is basically 8x. Now, after the public sale, after the pre-sale is over, and then we're doing the public sale, after the public sale is over, we're running two types of PDO simultaneously. And I want to explain what that means, PDO. PDO is a technology which I will cover in our next session. Is technology that designed not for initial offering, it's designed for post-offering, which means if a project already finished the pre-sale, finished the public sale, and you finish with those two and you have some token on some pool, Uniswap, PancakeSwap, wherever, right? Then you can utilize the PDO, because PDO is standing for post offering. And the main idea of the PDO is that unlike initial offering that you have fixed price, for example, like here, 0.05, here you don't have a fixed price. Here the price coming from the market, which means maybe the best price will be 0.02. But once somebody will invest and the price will go up to 0.03 or 4 or 5, the next guy that will want to invest will get that price. So in other words, if the price in the market go to $1 or half a dollar or $2, the PDO moving with the price, whatever it is, right? Now, another thing about the PDO to understand is that when you're pushing money to the PDO, it makes sense to buy from the PDO and not from Uniswap and PancakeSwap or other places. Because Uniswap and PancakeSwap have a slippage, right? And PDO, if I will push, for example, $10,000, I will buy my entire $10,000 at 0.02. But the moment I will finish, the market will go up because I push money to the pool. And then the next guy will have 0.4, 5, or 6. But it still makes sense for him to buy from the PDO and not go to slippage places, right? Now, also the PDO offering also APY like the pre-sale and public sale. But if you stake in for longer time, right, it's offering even by far more. So it's depending if you want short time or long time. Now, one of the things that's cool about the PDO is that basically whoever is buying from the pre-sale and public sale and from the PDO, moving after they claiming the token and moving to something called Dumper Shield, which is a technology that belongs to the PDO. So what is the Dumper Shield? Dumper Shield is basically a technology that designed to remove the run on the bank. People do not launch and immediately all the people that come on the ground floor dumping, and then the public that come along gets screwed, right? The Dumper Shield basically allow you two possibilities. Once you receive your token to the Dumper Shield, you basically have an escrow, which is controlled by your wallet, right? Your wallet is the private key. And you can sell your token from the Dumper Shield by two ways. One is either by OTC, which means it's inside OTC that I can sell to other people. And it doesn't matter if I sell for half price, double price, or even for free, because nobody cares. It's not affecting secondary market. Or another option that I have is to utilize the gateway. The gateway basically go to the smartphone and place an order. So for example, let's say the value of the token, and by the way, just so you know, from math point of view, if people will push to the PDO $500,000, right? $500,000. Sorry, $1 million, right? $1 million to the PDO, right? Then the value of the PDO, and by the way, we already have a pending order for the PDO more than $5 million, just for you to know. So if people will push to the PDO $1 million, the value of the token will not be 0.02. It will be $2, right? And what that means, it's kind of equal to 800x for those people, right? So it's crazy numbers. It's crazy number that when somebody doing 100x, 500x, 800x, in regular project, it doesn't wait to see, oh, let's see if it will hit the 1000x. No, it's rushing to dump before everything goes south, right? And that's what's causing the dumping, because everybody thinking that it's about to dump, right? And here it's not possible. Here, when everything is going up and I want to sell, I have to sell through the dumper shield. And what that means is that when I place the order through the dumper shield, the gateway, it's going through the smart swap and it's selling at average market. Let's say the price of the token will be $2 or $1. What that means is that I cannot sell the token on half cent or double or $1 or half a dollar or 70 cents. I have to sell it, or automatically the smart was selling it at the average market price. Now think about it. What is average? Average price meaning that someplace, somewhere, somebody buying and selling this token above the average and below the average. That's how average been created, right? So what that telling us? They're telling us if the smart contract selling token at average price, which is taken from CoinGecko and CoinMarketCap, and the price in Uniswap, PancakeSwap, and other places increased from $1 to $1.05 and 10 or 20, CoinGecko and CoinMarketCap do not know about it instantly, right? It takes time until they're doing a new average or until they've been notified about prices changes. So there is a window of delay, right? Until average price been changed. So the smart swap that taking the price from CoinGecko, CoinMarketCap will still going to sell at $1 or $2, whatever the average market is. So if in the market for sure the price is no longer one, it's become to be $1.10, $1.20, what do you think will happen? What will happen is arbitrage bot will take advantage of that opportunity. They will buy here and sell over there. I mean, how bot works? They're buying here and sell over there. And if the gain is cost +1, they execute. If it's cost -1, they don't execute, right? So as long as that you have place that offering +1 for them, they will always buy here, sell over there. Most of the traffic in the DeFi, right, in the DEXs and AMM, it's by bot. They're buying here, sell over there. So in other words, instead of me buying at 0.05, right, and even after the discount, it will be by far less than that, and go to Uniswap, PancakeSwap, and dump on half a dollar when the market is dollar, because I don't care. I already made my 100x. Now, because of the dumper shield, I cannot do that. Now the dumper shield is selling a dollar, and when arbitrage enjoying from this arbitrage advantage, they're basically also doing piggybacking for me by facilitated liquidity. They're generating liquidity, buy here, sell over there. In the meantime, they pay me the average market. So in other words, what I'm trying to say is that most of the pre-sale, not most, all the pre-sale and the public sale, and those that will buy from PDO, all those will not be at the market. You know what will be on the market? At the market, there will be pools on Uniswap, PancakeSwap, SushiSwap, BSwap. So there will be kind of $450,000 market cap. That will be the initial market cap. I mean, I never saw a project that's starting below 10 million, right? Or 20 or 30 million. Everybody's starting around that number, right? Here we're talking about something that can change the game, right? In the financial world, and the market cap baseline starting in the market is basically less than $500,000, right? And as you mentioned, there is no team token, right? There is no such kind of thing, team token. If we want token, we have to buy token like everybody else. We either need to come with cash, we need to come with different tokens that we have from different projects in the ecosystem, or we need to actually take equity stock from the company and use it as a way of payment. We have to give something with the same face value in order to get something with the same face value. Nothing free, not even for us. So that kind of give fair and square solution for everybody. Not because it's starting low and you have a lot of potential, but no, all those from the pre-sale and public sale and PDO and founders and team and advisor and everybody and his sister and his mother do not have a token to go and dump. So the dumping here will be look by far different than anything else in the market. What we also have something called treasury and router. Sorry, there is no treasury. That's what I try to say. A lot of projects keep money in reserve, right? So they sell some, take some, and bunch of stuff they keep for future use, right? We don't have a treasure. Whatever we sell, we sell. Whatever we don't sell, we burn. There is no treasury, there is no reserve, right? And there is router, right? What router meaning that when you have a token that's belong to the ecosystem, let's say smart token, Degen token, PDO token, Freeze token, and you don't want to sell from OTC, or you don't want to sell at the market to Uniswap, PancakeSwap, or to the other user, you can actually use the router to move from one project to another. And it's not even trigger attacks because it's inside transaction inside of the company. So you can have a token that was a dollar, and you can pick up different token that was a dollar. As long as it's the same face value, you can move between projects, and you can diversify your portfolio between all the projects that exist now or will be exist down the road. Make sense?
It's amazing. I just want to see what the outcome of this is when everything launches and stuff. It's very exciting.
It's make both of us. I mean, I'm so exciting because SmartSwap is around the corner and we're about to launch it very soon. And it's the same concept. There is no tokens in the market. No, nobody have tokens to dump. We even rebuild the BSwap that will open the first pool with that in a new technology that have anti front running attack. So there is no front running attack potential. There is 10 days that there is no slippage, which means people can buy, but they cannot sell for the first 10 days. So it seems like everything going to look very good. Obviously, we're missing something. We always don't know what we don't know. But I think after so much work that we did, I think we built it in a very well way. And I think once we will see that it's working once, to duplicate that concept again and again and again, we'll kind of go in to make sure that it will be played on the same way again and again and again as well.
So SmartSwap has to launch first before PDO and Freeze. Is there any estimate time you can give us? I know on Telegram you said you guys are gonna announce a launch date soon.
Correct. I see that you follow. Yeah. So with SmartSwap, we basically when we build everything, and then we come into problem as we build, because it's not like building real estate that everybody know what materials you need to use, what stuff need to be done, and game over. Here, you need to keep changing. You keep changing because regulation change. You need to changing because sometimes somebody finds some hacking backdoor with somebody else's technology, so you want to make sure that you don't have that vulnerability. Sometimes you build 10,000 lines of code and suddenly line 59 do not agree with 99050, and they block each other, and then you have kind of a frozen position. So every time you add something, you need to run testing on the entire code, make sure that nothing is left behind. So it's a lot of moving parts, and we kind of finish everything. And I'm so excited about SmartSwap because it's not about the cross-chain. I mean, I believe people will eventually have our technology or similar for doing true cross-chain like SmartSwap will have, but it will be, first we have the patent that file over the zero slippage, so that's unique, that you don't have slippage whatsoever. And also this swap provider, the swap provider you're driving liquidity from centralized exchange, right? CeFi to DeFi, that's very unique. And that's the most important part. You remember what I told you? We focusing on solving liquidity issues, right? So driving liquidity, it was the most important part. So we really kind of, by the end of the day tomorrow is Thursday, by the way, for those that listening. So by the end of the day tomorrow, we will run final test. And if the majority of the stuff are good and we didn't find any serious bugs, obviously there is always small stuff, but I don't worry about them. But if there's serious stuff that I have on my bucket list, if they're all good, then we will announce when the public sale for the and the release will take place, and it will be during that month, right? So by the end, if everything good, by the end of this month, SmartSwap will hit the market, and it will be phenomenal. And like you said, yeah, we're starting right now. We didn't actively push PDO and Freeze to do raise. People just coming, and that's okay. But once we will finish with Smart, then we will start push the gas to start raising money for Freeze and PDO. Beautiful. Or maybe not. Maybe it will be sold out by then.
Yeah. Thank you so much, Jude. We'll talk again and talk a little bit about PDO. But is there anything else you want to tell the community before we turn off? And I hope you were recording, because there was a lot of information and this talk was very long. So hopefully it was recorded.
Yeah, everything recorded. I will give you a copy.
Okay, good.
Yeah, there was I think one of the things that you need to realize when you're working with Adam Foundation is that you never know, even as an investor, by the way, you never know which project really going to change the world, right? Which one is going to make it. But if you have a cross router between projects, and you know that you bought into project A and suddenly project C or D is booming, and you know that you can move between them and have access to liquidity between them. So it doesn't matter. As long that you in the game part of the Adam Foundation, and even if you have token that doing 100x and suddenly some of them other doing, by far more, you can always move from A to B, right? And you didn't really miss out by not joining to the right one in the beginning. You just need to join.
Yeah. All right. I think that's about it, right?
Yeah, I think we cover Freez, we covered the tokenomic. Next time we can cover the PDO and you will have full set.
All right. Thank you so much, Jude. Hope you have a good day,
Sure thing.
and thank you for helping the community out learn about these projects.
Absolutely. All right. Thanks.
Bye.